What if your losing streak is not your fault, but because you've not understand this one candle strategy that have predicted every market movement in this 2025? Once I started using this, my whole trading flipped. Here are things you will learn in this video. I'm Victor Snow from Trading from the Soul, where smart money is simplified. Like and subscribe so you don't miss out on future videos. The one candle strategy is a strategy that involves getting a trade from only one single daily candle, guys. For you to be able to use only one daily candle, you have to know these 4 rules, which is what? Your daily open, your daily close, your daily low, and your daily high. Your daily open is the place the price of an asset open each day. If you see this now, these guys are all daily candles, and where are the openings now? This is the place each daily candle opened. So the second thing you need to master for this one candle strategy is what? This daily close. Here, daily close is a place in the market or the daily activity for that day is being finalized. The banks record this because of it determines where the next daily candle will open. Remember, in all this thing we are doing, we are trying to predict the behavior of the next daily candle. And I want you to remember, the daily close will always be higher than the daily open for a bullish daily candle. This is what I mean. All these right here are what? Bullish daily candles right here. These are the opening of each one of them, and here are the closes of them. Can you see? The closures are always greater than the opening. Closure is always greater than the opening. The daily low is what? The lowest the daily candle got to before this closure right here. Why? The daily high is what? Opposite of it. The highest it got to before this closure right here. To master this one candle strategy, you have to understand what? The progression of this daily candle behavior, which is what? How this open, close, low and high moved. So the progression of this one candle right here is what? We open from here and we move to a low, guys, and from this low we move to a high before what? We finally closed. Understanding this will make you know the behavior of the next daily candle. So once you've closed here, you mark out here as your closing level here. So during your next day, your next daily candle has the ability to what? Come down to this level. Once it is trading below this closing price, we start looking for what? Institutional liquidity in the market, guys. There are zones where large financial orders are already sitting at. What you just need is to trade with those orders, which we have a few of them, which is number 1, an order block in the market, and number 2, a fair value gaps in the market. They are simple, guys. Let me just break it down for you. What I mean is, when price action is coming below this daily close here, from the 15 minutes time frame perspective, we want to look for an order block level, guys. An order block is this last down close candle, bearish candle, for this series of up close candles. Here is my order block marked from this candle's high to this candle's low. Order blocks are very, very important because they review where big players like the banks, the institutions have already placed their orders. And we have rules for a high probability order block, which is what? Order block must what? Lead to a takeout of liquidity. And number 2 is what? It must be unmitigated. It's simple. So what I mean is, we want price action to come to take out these highs in the market. That's a break of market structure. And what I mean it must be unmitigated is what? Unmitigated areas are areas in the market that hasn't been revisited by price yet. What this means is what? An order block is used only once. So if we have a scenario that price action came and price action have used this order block, if it comes back here, we cannot enter from this order block again. Why a fair value gaps is where when the high of the week of the first and the third candle don't overlap. This is first candle, second candle, third candle of your choosing. So this is the high of the week of the first candle, and here is the low of the week of your third candle. And can you see there's a gap right here? And this gap came as a result of price moving aggressively in one direction. So when I teach fair value gaps to my students, I make them see this way, that is when they are climbing a staircase and they missed a particular step. So no matter where price action have gone to, price action will always want to revisit that particular step before it can still continue in its original direction, guys. And this is where we want to always enter from in the market. So from our daily candle perspective, we just see something like this. Price action came back to this level and we made our entry stop loss below here, and it moved in our desired direction to our take profit level. Just one stupid daily candle, guys. So now let's talk about discount crossing, guys. Discount crossing rule is that we have a higher chance of winning a trade if we can get our order block and fair value gaps from the discount crossing in the market. Discount crossing is the 50% movement of this daily candle. Just mark your fib from the low to the high. Here is my discount crossing. If we get our order block and fair value gap from this discount crossing, is a higher probability setup, guys. So guys, this is a trade I just took right now, GBP/USD, and can you see it move a 1:6 risk to reward ratio, guys, and even after I stepped out, it is still pumping, guys. So how did I get this setup? Is simply what this is what my previous bullish daily candle, and the progression is what we opened from here, we moved to this low, which moved to this high before we finally close. I'll mark out this closing with our horizontal ray, and I'll move to the 15 minutes time frame. So from the 15 minutes time frame was price action started trading below this close. I saw what a liquidity sweep. Can you see my order block right here? Also, can you see other price action levels, low to a high, low to the high, low to a high. So what I did was I put my entry here and order here, stop loss 2 pips below this order block level, and I target this high as my take profit level. Can you see how price action came down to this level, tapped my order block zone, and it moved rapidly to my full take profit level, guys, and that is a win for us. And it is just one daily candle, guys. Can you see this strategy is so simple? Do you know that people tend to overcomplicate their strategy? That's why it doesn't work. You don't make money by how hard your strategy looks. Are you currently using this particular strategy? I would love to hear what you think about this particular strategy at the comment section. So let's take another setup. This is daily time frame of US30, and can you see we closed above here as a bullish candle. So the progression of this candle is we opened here, moved to this low, and moved to a high, and finally we close. Mark out our closing with a horizontal ray. Next is what we move towards the 15 minutes time frame. I want price action to start trading below this close. So what we'll do is we'll mark out our institutional levels, guys. We have what our fair value gap right here. This high of the week of this our first candle, this low of the week of this our third candle here. So this is our second fair value gap. Also, can you see we also have another fair value gap right here, guys. Next thing is to get our discounted crossing, we use our fib to mark from this low to this high. So something like this, from this level to this level is our discount crossing. And can you see this one is not in our discount crossing? What we do is we remove this particular guy, and what we only have 2 zones to trade from right here. So what I'll do is I'll make out my entry here, stop loss below the low of this fair value gap. Also make another entry here, stop loss below this low here, guys, and my take profit can be these highs in the market. And let's see how the trade unfolds, guys. We are in the setup, guys. Can you see how price action moved in our desired take profit level, and that is a win for us with just one daily candle. If this video is really helping you, a thumbs up and a subscribe right now will be nice. Again, once this daily candle closes, we repeat the same thing. We mark out towards our low to our high, and our closing right here will move towards the 15 minutes time frame. We are trading below this close, guys. Next is we get our discount crossing, which is this level. I will mark out our fair value gap right here, guys. We just want to make an entry here, stop loss below this level, and let's see how the trade unfolds, guys. Can you see how price action almost tapped us in? If you're using a spread account, you would have entered this trade setup, would have moved to the upside. And also, if you're using the third candle fair value gap rule, your fair value gap will look something like this, from this high to this low here of this third candle here, and you would have entered from here. So guys, if this helped you improve even a little as a trader, a thumbs up and a subscribe right now will be nice, and leave a comment on what topic you want me to cover next. It helps me make better videos for you guys. And if you're still struggling with trading, I just began a 3-free-day trading course. Link will be at this video's description. And if you love this video, you definitely love my stupid one candle strategy that makes 10k a month. See you there right now.